You're watching Masters in Trading Live with Jonathan Rose.
Awesome. Good morning, my fine feathered friends. My name is Jonathan Rose, and welcome to Masters in Trading Live. At Masters in Trading Live, I get on here every day the market's open, go over the market, share some thoughts. Once in a while, we'll share our trade of the day. So I've done nothing but trade my entire career. I've been out in Chicago. I've worked at all the exchanges. I've seen all kinds of different markets. So right now, I really try to help people manage volatility and manage their overall exposure, because when the markets go up, everybody makes money, right? It's easy. Everybody is so smart. But when it goes down, when it gets volatile, that's where people run into a whole bunch of trouble, and that's what I specialize in. So today's gonna be pretty cool. We opened up our Masters in Trading Challenge. The Masters in Trading Challenge is where I believe that I could take anybody from no options experience to learning how to trade options within 7 days. You can join the challenge. It's mastersintrading.com/challenge 2025. The challenge has now been open for 5 days. We're going to go over the questions that have come in from our Discord through the challenge. So today is really a mailbag day. I'm going to answer whatever questions you guys have. I'll stay on for as long as necessary, but I'm going to start off. I think I have like 5 questions that I pulled from Discord, but we'll just go through any questions and have some fun. See how we do. So here we go. Let's do it. Good morning. Good morning. Thank you, everybody, for getting in early, saying hello. I always love that. Okay. Let me start here. Jonathan, I completed the training course. I found your style educating and compelling. I've worked with other services. I've dumped them all, and I'm enrolling in your advanced notice service. So there you go, from Eric, mastersintrading.com/challenge 2025. Let's get into the questions. Let's start here. Denny, been a member for a little bit. Let me get my pen here. All right, these are the challenge questions, guys. So what do we got? We got the VIX 90, the VVIX, and the VIX. Okay, first of all, the VIX is the fear index, right? Shelly loved that. The VIX is the fear index. The VVIX is the VIX of the VIX, and the VIX 9D is a 9-day measure of volatility. All are trending lower, which is good or bullish. Absolutely. Municipal bonds are going sideways. Gold is higher. Looks like QQQ, and SPY are both indecisive. Denny, I don't think so. This is our vital tool, and this measures volatility. 1 day, 9 day, 23 day, 30 day. This is the VIX. 37 day, 90 day, 180 day. This is a measure of uncertainty. Okay? Right now, this is a normal looking curve. More risk the further that you go out. We run into trouble when this vital curve looks like this, where it's real steep up front. If it was looking like this, this would be high risk, but it's not. It's got a normal shape. And right now, guys, bullish, bullish, bullish. Markets are going higher. Risk is being pulled out of this market. Watch. If I pull this up and we look at the different VIX indices, VIXs right here. VIX 1 day is 8.6. VVIX. VVIX, guys, is the VIX of the VIX. Here's what it looks like. VVIX. How much fear is in the fear index? That's why people watch VVIX. And you can look at it. Let me just grab a chart for you guys, because you can look at this just like you would any other chart. right here. The VVIX, I keep saying it because I want you to remember it, okay? Here's what it looks like. Last trade, 87.96. When we start to see this kind of behavior, guys, it's extremely, extremely, extremely bullish, okay? So there's your VVIX. If I want to look at the VIX 9-day, you can just look VIX 9D. Again, notice how low it is. Notice how offered it is. When the VIX 9D goes down, markets trade higher. So good question. But Denny, if I was going to rephrase your question, I would do it in a way that they're not indecisive. They are strong as can be. They are the strongest that we've really seen all throughout 2025. Okay? Does anybody have any questions on that? Right now, volatility is being sucked out of the market. Okay? Bullish, bullish, bullish. There's no reason to play for lower trades unless you go sector specific. In a sector specific area, you might find a reason to bet on the market going down or a sector going down or a stock going down. That might be a trade for you. But overall, when we talk about the indices, what's going on in the world right now, bullish. Don't think about globally what's going on and thinking like, oh, wow, a lot of global conflict. The market should be pricing in risk. Don't think what the market should be doing. What is the market doing? And then react based upon that. I think that's a big difference than how professionals approach the market and how retail approaches the market. Too many people will look at headlines and say, you know what? The VIX should be higher. There's uncertainty. I'm going to play for the low side. I'm going to buy puts. But don't do that. React to what the market is doing and then make trades based upon that. Does that make sense? Guys, can I just get a show of hands? Give me a yes. Does that make sense of what I mean? Don't speculate. You don't know more than the market. Understand what the market's doing and look for opportunity that's congruent with the market's vibe. Don't try to create a crazy market out of a slow market. When you're in a slow market, you're looking for stocks to buy. You're looking to be patient with your long-term holdings. It's a huge, huge lesson. So cool. Everybody gets it. I love it. Very, very important. React. Don't predict. Yeah. But Richard, the VIX reacts. It doesn't predict. But that's okay because we're not just looking at the VIX, right? We're looking at the structure of the VIX. Okay? Don't look at anything independently. If the 9-day VIX spikes, what is the 30-day VIX going to do? 9 days of the 30 days is the same thing, right? So if the 9-day VIX spikes, the 30-day is going to spike, but maybe the risk is all in those 9 days, not in the 21 days after those 9 days, and that's why the 30-day VIX is much lower. Those are all things that you should learn and we discuss in our Discord. Great question, Denny. You brought up a good conversation for all of us. Next question. Sweet. Erickson, welcome. Brand new to the forum. I am part of the unusual options activity. I see the daily activity and their rankings. I really have no idea how to approach these stocks. Good. Let's talk about it. All right. So let me see if we can do this. We're going to do this all live here. So if I go to my services, and we're going to look at advanced notice. You're not allowed to see the trades that we share, so don't look at that. Here's what our unusual options activity tool looks like. every single day it updates. So from Wednesday, these are the top names from Wednesday. And then from Thursday, they update first thing in the morning, but then they update every hour. Now, how do we use this? Well, if you click on FSLR, you'll see the trades. These trades were done June 26, 190 calls, and then 150 puts. Now, this might not be as exciting to me because let me just pull up FSLR. FSLR, June 2026. Now this is 357 days away. That's a really, really far out order. The 190 calls. Okay. Somebody did 3,000 of these. And it looks like they did them June 26s for $22. They sold they went through the offer pretty much. So they did these right on the opening. Okay? 3,000 calls were traded right on the opening. So what we want to do now is I'm just going to pull up a 1 minute chart. Now, I'm pulling up a 1 minute chart because the 1 minute chart, you can tell what the market makers have done against that trade. And I'll show you what I mean. FSLR, right on the opening, it gapped up. So on the opening, it gaps up, it trades up to 158, and then comes right back down. So what I think happened is on the opening, somebody came in and wanted to buy a whole bunch of calls, right? If somebody buys a whole bunch of calls, it's a bullish trade, right? If I buy the 190 calls in FSLR, it's a bullish trade. Well, what I think happened with this is on the opening, somebody had to buy 3,000 calls. Let's say you sold that person 3,000 calls. If you sold that person 3,000 calls, you are very, very short FSLR. If it rallies, you're going to get slaughtered. So what the market makers are forced to do is they have to buy stock to hedge those short calls that they just sold. And that's why FSLR rallied right after the trade. So for me, this is a pretty bullish trade, but we can do better. It's not that sexy. It's not that great. What I'd much rather find, let me look at this BHF. This might be something interesting here. Let's look at BHF. Now, BHF, August 50 puts. And that's going to be right here. Now, the open interest is going to be the trades from yesterday, I'm sure. So 8,000. You notice if we look at the volume, there's not much volume going on. This is a really, really big trade, right? Whoever did that trade, we could probably give them the benefit of the doubt that they know more than we do, because it's literally 8,000, 1,000 for a $2 stock. That's a really, really big order. So most likely somebody is making a very, very bearish bet on BHF. If we look at the charts from yesterday, these trades were done starting first thing in the morning. Very, very volatile first thing in the morning too. gets crushed first thing in the morning. Pretty bearish bet, I would think, on BHF. Then I just do research and continue to try to find good trades. So BHF, after the trade, this is yesterday, pretty offered. So I don't know, like if this trade, if it was up here at the top of its expected move, it stays within its expected move 80% of the time. That might be a trade for us. But with it so offered, it was trading 60 and now it's trading down to 52. Even if that's big unusual option activity, I'm not sure that I really like to jump into this trade. But it's a bearish trade. Okay? It takes a little bit of time to get used to, but again, that is why that we have a community. And if I pull up the community, our advanced notice community looks like this. And if we go throughout the day, sorry, let me just go back, just to see where the day started. June 26th is this morning. You know, you have tens of 20s of comments that are in here throughout the day talking about unusual option activity. And that's what you need to do as traders. You find a trade, you discuss the trade, and then you decide whether you want to risk money or not risk money. I want to do a little snowman here. Got a silver medal at the national championships this week for cycling. So not only are we a smart group, we are a freaking athletic group as well. I'm going to give a glockenspiel for our cyclists. Not only smart, masters in trading guys, we're athletic too. So very, very, very cool. But that's what we do, guys. That's what we do. All right, let me go to the next question. Kind of a fun format. How important? Very. Very, 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 very. J-Rog is a member. He answered Erickson's question. From a member, loaded question. Best advice I can recommend? This is what I think is the biggest problem for newer traders, or even for those who have been with 20 different services. They get in right away, give me a trade, give me a trade. They judge the service based upon that one trade. I want to challenge you with one thing. Whenever you have a trade, I want you to write down the reasons for being in the trade. QXO, TMC, some of the names that we've been talking about. When we share those trades, we share a PDF with our room. We share 5 to 10 reasons of exactly why we want to be in the trade. Once you realize that the substance of being in the trade, when that trade goes against you, you might stay in the trade. Don't do trades just based upon technical analysis. I promise you, whatever chart you're looking at, whatever technicals you find, I can show you that same stock in a 2-hour chart or a 1-hour chart or a 30-minute chart. If you think it's bullish, I can convince you it's bearish just on technicals alone. Okay? There's millions of different permutations with technicals. Don't get caught up in the nonsense. If you haven't yet joined Advanced Notice yet, you won't see all the trade recommendations or discussions, but please practice with paper trading first. It's much easier than jumping into the deep and losing real money. Review the course material. Education mitigates risk. Dr. Jun Yoshi. What will happen too if somebody buys a big trade of puts? Will that lower the stock price too? It certainly could. It certainly could, but it's a much deeper question, because if somebody buys puts, they're playing for the stock to go down, right? If a big institution buys puts, and if they simultaneously buy stock, buying puts plus buying stock at the same time is the exact same thing as buying a call. So Doc, just because someone buys puts, people think it's bearish. If you buy a put and if you buy stock at the same time, it's called a synthetic call. And oftentimes, institutions will do these synthetic trades because they're trying to trick retail traders. They can't trick us though. We're on to them. More questions. Ooh, Master the Trading. Has everybody taken the challenge? Hopefully you guys are all in the challenge. It's extremely affordable and a great, great product. What else we got? Tom here too. You have to fit it into your life. Much or as little time you have. Some of us work full time and then some. Others are retired. Just follow along and grow at your own pace. There is so much to learn. And Jonathan will give you lots and lots of trades. I listen a lot more than participate. I really like this, by the way. Not so easy to do. I learn a lot from the more experienced traders chatting. What I really want, guys, if I had my druthers, is you guys would drop everything else that you're doing and learn how to trade and learn how to invest. Something you'll also notice, when the VIX increases, when risk comes into the market, there's going to be a lot more trading because we need to protect our longer term investment account. When the market's just going up, all those 401ks, those long-term holdings are doing great. You can use trading to protect your portfolio, to de-risk your portfolio. I think that's all my slides. TMC, great, great trade. Yeah, discard, no. All right. I'm going to hop back on. That was a lot of fun, guys. Thank you so much for joining. We got a trade that we shared for our short-term options community. It's an earnings trade that has earnings before the June expiration, and that's what we're going to talk about right when we hop off to our all access community. Thanks everybody for joining. Leave a comment, subscribe. I'll see you guys tomorrow. Thanks for watching, guys.